And good afternoon. Welcome into Market Talk here on this Friday, April 8th. Thank you so much for joining us and making us part of your day once again. I am your host, Jesse Allen. Find us online. MarketTalkAg.com is our website. It's where you can find us. All of the streaming sources to listen to the show on your favorite podcast outlets, the YouTube channel to watch the video version, all of our social media, the latest news of agriculture, and much more. It is all online at MarketTalkAg.com. Well, we had the April WASDE report released on Friday. Not a whole lot of surprises, but still some numbers of note to talk about and help us do that here today. Our good friend Ted Seifried with Zaner Hedge joining us this afternoon. Ted, great to have you on, sir. How you been?
I'm doing great, Jesse. Always a pleasure to be on. Thanks for having me, man.
Well, I appreciate you making time on a busy Friday. Let's dive right in. The WASDE numbers out for April, and really not a whole lot of surprises. The market traded higher into the report. We dipped a little bit right at 11, then we kind of bought it back here today with some good strength out there. Overall, 1,000-foot view, what did you see with the April numbers? Did anything stand out to you?
Well, yeah. So first of all, Jesse, this is a report that is not as big of a deal as the report that we saw last week. And it's not a report that is as big of a deal as the report that we will see next month when the USDA includes their first real, at least on a WASDE, new crop balance sheet. This report traditionally is just, let's get a little bit of an update on South America and maybe some tweaks on the demand side of the equation for the domestic balance sheets. And that's exactly what happened today, at least for soybeans. For corn, they left the domestic balance sheet unchanged, which is a little disappointing. The market wanted to see better corn exports in light of the Ukraine-Russian situation, but the USDA chose to punt on that, at least for now. So we went right back to what we were doing before the report in corn. And for soybeans, you know, the USDA gave us a carryout number, which was pretty much directly on top of what the trade's expectations were. They cut they increased exports and cut our carryover down to 260 million bushels, which is a relatively tight carryover. It's a far cry from the 325 million bushels that they were looking at when they did their only new crop balance sheet that we have so far, which was the Ag Outlook Forum balance sheet. And by the way, that goes a long way to kind of offsetting the big increase in acres that we saw last week. So, you know, when we saw the big report last week and we were down really very sharply in soybeans Thursday and Friday, based on a shockingly big, or at least to a lot of people, a shockingly big acreage number. You know, I was saying at the time, like, look, this is the funds reacting to something they don't understand. They see a number compared to what trade guesses were, and they say, oh, this must be bearish. Let's get out. And they go running for the doors. But at the time, you say, okay, well, I'm plugging this new acreage number that's much higher than expected into a USDA's balance sheet, which the only thing that I have for a baseline is that Ag Outlook Forum balance sheet. But I'm plugging those numbers in with a lower beginning stocks number and a little bit of a higher demand number because, you know, we've got record new crop sales on the books right now, mostly for China and unknown destinations. And all of a sudden, I'm looking at a carryover for new crop beans, not at a 500 million bushel carryover, but maybe at 280, right? So the new crop soybean situation hasn't really gotten, it's certainly not bearish. Maybe it's not as wildly, unsustainably bullish as it would have been if we had 88 million acres, but it's still a really rather bullish scenario. And now we actually have what is probably going to be a really bullish corn scenario too. So I'd much prefer two bullish markets instead of just one. So I think that's good. And we spent this week kind of realizing, well, hey, these numbers aren't bearish, and the corn number is really bullish, and the soybean number, you know, we're still dealing with a tight balance sheet at a 51.5 national average yield, and with the added acreage we have in like Tennessee and places like that. Sorry to pick on Tennessee, Jesse, but that's, you know, up 20% in soybean planted acreage. Well, it's not going to help the national average yield. That makes it a little more difficult to get to that 51.5, and especially when you look at the drought monitor and everything like that, and you say, oh boy, you know, we gotta have a whole lot of weather premium in the market. There's too much risk on this crop, and again, this week was the realization of that. And it all kind of came to a head on Friday before the report, because we're looking down at Argentina and saying, oh boy, there's frost in this outlook. And that could clip this soybean crop that's already had to deal with issues throughout the growing season. And could bring down that 42 million metric ton down even further, which, by the way, the USDA left that number unchanged today, somewhat as expected. But they did lower the Brazilian crop to 125, which was pretty close to the traders' expectations. I was at 125.5, so a little bit more than I was expecting. I kind of think that's going to be around their final number. But either way, that Brazilian number has come down 19 million metric tons. We're going to have to make up for part of it. We've been doing that. But that, to me, Jesse says, there's more sales to come, more weeks like we've seen. Like just this last week, we sold 1 million metric tons of soybeans in a time of year where we're expecting to sell nothing. We're going to see more of that. And in particular, we might see a whole lot of it in July and August when we are kind of scraping the bottom of the bins for soybeans. So the old crop soybean situation it has not changed. It's been bullish. It still is bullish. The report today and the export sales from yesterday are a good reminder of that, right? We continue to sell these beans. The USDA is now down to a 260 million bushel carryover. The stocks to usage number is getting to that really rather tight scenario where it justifies price rationing and things like that. So yeah, it's the trade needed to be reminded of that bullish story. The trade needed to understand that the increase in soybean acres was very much needed. We desperately needed that to have a chance at not running out of soybeans next year. But there still is that chance because weather is got to be a concern. We haven't even planted this crop yet.
Yeah, a lot of things to think about. Well, Ted, moving on, I'm going to pull up the world ending stocks on the video screen. Just want to get your thoughts on the world side. We saw corn come in a little bit above expectations, beans a little below, and wheat landed below expectations. We wondered if USDA would factor in the Ukraine situation. Do you think they did a little bit of that on the world side here today?
Yeah, but the numbers that we're looking at right there are that crop's already been grown, right? So it's not really reflecting what, in fact, they haven't really told us what they think about is going to happen as far as planting is concerned in the Ukraine or Russia for that matter, but really the concern is Ukraine. But what you're seeing there is, the corn number coming a little bit higher than expected. Well, that's because the domestic ending stock number didn't come down like we were all thinking it would. And by the way, we are all still thinking it will in corn. It's just the USDA decided to punt on this report because, again, next month's the bigger deal with new crop balance sheet. That's when they'll want to adjust the beginning stocks number. So they just figured we'll wait. And then the soybeans coming in a little bit lower than expected. That's reflecting of a slightly larger than expected drop in that Brazilian production number. So really not a whole lot going on there in those world numbers. Those in and of themselves weren't surprises. It all kind of trickled through what happened on the domestic balance sheet down to the world numbers, domestic balance sheet and the South American production.
Sure. So you take all these numbers into account. Again, not a whole lot to really move the market today. But now as we look forward, what are you looking at here as we get into the month of April? We obviously have a crop to put in the ground. So that's going to be a big key. And then, you mentioned some of the exports and some of those things. So as we get into the month of April now, after we've gone through a bunch of data, a bunch of reports, what are you looking at in these markets, Ted?
Yeah, look, the longer term outlook for corn has dramatically changed in the last, week. And that's because we're looking at very significant amount less acres than what we had originally been thinking. And, or at least what we had in mind going into that prospective plantings report. And then since then, we've talked about, well, look at the corn bean ratio. Corn's trying to buy back some of those acres. Maybe we get a shift back towards corn. Well, okay. But we've never really seen more than about 1.5 million acre shift from planting intentions to actual planting that hasn't been caused by weather. 2019, we have to throw that one out. That was completely weather related. We just couldn't get the corn planted. We saw a big shift to beans because we had to. And we haven't seen, or the other one, 2020 is a tough one because of the trade war. It was just some very last minute, like, oh boy, we really can't plant soybeans. So I want to take those 2 years out. But aside from those 2 years, we don't see the seismic shift in acres from intentions to actual planting numbers. And the other thing is, with input costs being as high as they are, even though the corn bean ratio is really asking for more corn, is it enough to really justify changing plans last minute? And then the final thing, and probably the most important thing, is that we're cold. My guys in Iowa are talking about, their overnight temperatures are still in the 20s. We're not enjoying this early season planting, the early season warmth that we have had in the last few years. We're not going to be, it doesn't feel like we're going to get off to a really great start in planting. The east is wet, the west is dry, but cold. So I don't think weather's going to allow, input costs are going to allow. I just don't see this big shift back to corn acres. So that being said, as long as, maybe let's call it 500,000 acres. I think that's likely or possible either way. But for the most part, I think these acreage numbers are what they are. And if that's the case, you look at corn going forward and you say, well, if I plug these acreage numbers into that, again, that Outlook Forum balance sheet that's the only thing we have from the USDA right now. And the new beginning stocks numbers, because, and old crop ending stocks have changed since that Outlook number had come out. But if I do all that, I come up with 1.44 billion bushel carryover in corn. That's pretty friendly. But Jesse, that's at a 181 national average yield. That would be a new record by almost 2 bushels an acre. Are we going to do that? Are we going to do that with input costs being as much as they are? Most farmers are going to use inputs as normal, but there are going to be some guys that look to cut some corners, and that could make it harder to hit that 181 national average yield. Also, look at the drought monitor, right? And if that doesn't change pretty significantly, and especially if it moves north and east, 181 is a pipe dream. 179 might be a pipe dream. And speaking of which, 179, if we put that in for a national average yield, which pretty much ties the record that we have right now, we're at a 1.14 billion bushel carryover. And this is without even adding any extra demand from the Russia-Ukraine situation. So it's very easy to paint a picture of corn having a sub 800 million bushel carryover, which is really wildly bullish in corn. So, yeah, I think things are going to be really interesting between now and when we get into the first half of the growing season, when we typically put our highs in late June or July. Between now and then, we have to have a lot of weather premium. I think we'll continue to see exports, but we have to be very concerned about what's going to happen. Now, beyond that, if we are sitting here on the 4th of July and we have a very good crop, if we are in a position where this inflationary bubble starts to burst, which will happen at some point, things can change very, very dramatically between now and harvest. So we have to be very vigilant we have to be cognizant of the fact that there can be some fireworks that happen. There's going to be explosive markets for the next few months. But then we also need to be cognizant of the fact that we need to be taking advantage of those sorts of things and looking out further in time, and even further than just this harvest, maybe the next 2 or 3 harvests, and taking advantage of these historically good prices, right? So you got to have to really be on your toes here over the course of the next couple of months, looking for those marketing opportunities and making those decisions.
Don't get complacent. I think that's a good way to
Bad
sum that
time.
up. Ted, I want to talk to you about the crude oil market as well. We busted back below that $100 mark and looking like we're going to hang there on this Friday, barring some crazy circumstance in the last little bit of trading. What's your thoughts with how crude oil is sitting? And I know some of that probably tied to the demand lowering in China with COVID there. What are you seeing in this crude oil market right now?
I still think inflation is going to be hot and heavy into the first half of summer. I still think the energy issue is very much there. Something I've been saying this week is that, bull markets I probably shouldn't use that sort of language. Bull markets are difficult. Let's go with that. And what I mean by that is they will do things to really give the bears a whole lot of reason to think they're right. And they'll come in and they'll try to get short crude oil to try to scalp $10 right before crude oil turns around and rips their faces off for $20, right? And you wonder if this was a bit of a technical head fake to the downside to really kind of suck that part of the market in. But I think we're going higher. I think we're going to go and try those highs again. I really don't feel like that issue is done with. Releasing strategic oil reserves historically has not had a negative effect on prices. If anything, it increases demand, which makes it more difficult for our refiners to keep up with. And also, it's a real acknowledgement of the fact that there's an issue. You look at the Russia-Ukraine situation. Some people feel like that's subsiding. I don't really get that feeling. I have a hunch that it's going to get worse before it gets better. And even so, I feel like the world as a whole is going to kind of want to try to stay away from Russian crude oil for quite some time. So yeah, I think there's good reason for crude oil not only to challenge the recent highs, but maybe to go challenge all-time highs by the time we get to midsummer. That being said, just like we talked about with grains, you got to worry about that inflationary bubble burst. That will happen at some point, and when it does, the money flow out of commodities is going to kind of negate any sort of bullish fundamentals that we might have, at least for a time. You're going to see things come down dramatically, and there's going to be a lot of people saying, why? Because I'm looking at a balance sheet, it hasn't changed. Okay, fine. But there's also another component of these markets right now, Jesse, and that is this inflation that we're seeing. It's a big part of our markets. You have to be aware of that. So again, I think the picture is, for me, fairly clear between now and, again, midsummer. But then after that, all bets are up.
Looking as well, livestock real briefly here, Ted. Cattle and hogs feels like a mixed lower day, maybe a little more spread trading. We've seen some of that this week. Cash country for cattle. We started early this week. Any thoughts you're seeing in cattle or hogs to pay attention to here as we go to the weekend?
I want to say that I think we might have found some ranges to trade sideways in for a little while, Jesse. And part of the reason why I think that is because cash cattle, for example, have found a bit of a sideways range, at least for the time being. And with cattle, we're trying to kind of balance the drought conditions that are happening in the plains, because again, what that's going to do is that's going to push cattle to market, because guys are going to say, well, we don't have the pasture, and I don't want to pay these super high feed corn costs right now. So you're going to have more product up front, but that's actually fairly friendly in the long run. So you look at August and even especially December cattle, and I think there's upside potential there. But for the time being, I do think domestic demand is going to be really good for this grilling season. I know there's a bunch of people that are doubting that because they're worried about the stock market and high prices in crude oil and so on and so forth. But it really feels like the American consumer is sort of jaded to the idea of inflation right now and willing to spend. So I think grilling season is going to surprise, but I also think that's going to be somewhat offset by an increase in marketings in the near term. So yeah, I wouldn't be surprised if we're just kind of sideways in cattle for a little while. I kind of feel the same way about hogs. Fundamentally, I'm still kind of bullish hogs, but then I look at the prices that we're at and I say, well, okay, we could go make new highs, but if we do we have to really extend this that much higher? So, I mean, hog producers, I really do think should be taking a look at these prices and, hedging downside risk. I would do it in a way that you still have some upside potential, but I'd also be pretty quick to pull the trigger after making new highs on locking in some cash prices.
Well, great insight as always, Ted. And I know if folks need a little advice, they could reach out to you and the team there at Zaner Ag Hedge very easily and chat with you and talk about the marketing plan, can't they?
Yeah, absolutely. You can reach me directly. I mean, the phone on my desk is 312-277-0113. You can also find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. You can sign up for our morning newsletter. We also have a new app, Jesse. It's called My Farm app, and you can put in your cash position, your futures, your options position, and it gives you an overall kind of readout on where you are on your marketing. I think it's a really cool tool that we've been building for a couple of years. And then aside from that, if you're on Twitter, I am at the Ted Spread. I like to have a little bit more fun on Twitter, show a little bit more of my personal side. So yeah, check it out if you get a chance.
He's a good follow, at the Ted Spread on Twitter, and we appreciate the time as always, sir. Thanks for joining us on a Friday here with that Ted Seifried of Zaner Ag Hedge. Thanks so much, and we'll talk to you again soon.
Thanks, Jesse. Talk to you soon, buddy.
And that's Ted Seifried with Zaner Ag Hedge, and that's going to do it for Market Talk on this Friday, April 8th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.